Ja, ready.
Dear students, I hope you can hear me because I think I mute my microphone. I'm sorry. Okay, I hope you can hear me right now, right? Thanks a lot. This is some problems with my WebEx program or with my computers. Otherwise, I don't know what. Okay, never mind. So today we have two kinds of things to do. The first part would be based on the financial management new topic and the chapter 3 measure and report the financial performance. Yes, you don't have, as I know I haven't sent this topic for you. This is a new one. We'll send you after the class. Don't worry about it. Next one, the second part of the class will be based on the homework assignment number 5, which is based on the income statement and the balance sheet. So firstly, we are going to start from the new topic because I have the things which would be explained and would be supported in the homework assignment. That we are going to start the theory first. So the main points of the topic would be about the profit and loss statement. This is about the income statement. And the accounting skills, I was already giving you the information about the income statement. What is income statement, how to interpret, and you have done some practical exercises. But today we are going to start about the income statement, which we call the financial management as the profit and loss statement from the new side. How we would measure and can measure the income statement. So as well, we have some kind of points as profit measurement and the recognition of revenue. How we can recognize the revenue, the profit measurement and the recognition of expenses. This is very important. When and how we can recognize our expenses, because when we do prepare the income statement, this point is very important. And as well, you have in your homework assignment the parts about the explanation about the expenses, where you should interpret. Should you should you include those kind of expenses in the income statement or not? You remember you have some kind of things which is would be confused. Another one, the profit measurement and the calculation of depreciation. So if we have a time, we are going to study about the depreciation and the what kind of methods we use in the depreciation. And we have some kind of practical exercise based on depreciation methods. So about the depreciation, we would start when we have the time. Firstly, we should use our profit and loss statement points. So here is the key terms you must be able to use. This is about the profit, revenue, expense. You already know these kind of terms, which is the gross profit, trading profit and loss account. This is same as the income statement. Net profit, the cost of sales, accrued expenses. What is accrued expenses and what is prepaid expenses as well important. Depreciation, what is the residual value or scrap value, and the depreciation methods, which is the two main methods we use in the accounting, which is straight line and the reducing balance method. So what is the profit and loss account? This is all about the income statement. What is the income statement? Or sometimes we call it profit and loss account. It measures and reports how much profit or loss, it could be loss, has been generated over the period. When we talk about over the period, we mean within the 1 year, because income statement we do prepare at the end of each year, right? And the profits or loss for the period is the difference between the total revenues and the total expenses. You remember we have learned about the revenue profit formula, where is the profit or loss equal to revenue minus expenses, right? If our revenue is more than expenses, then the company will get the profit. If the expense more than revenue, then accordingly the company gets loss, right? So and as well, here it says states that the income statement is linked the balance sheet at the beginning and of the financial period. So how we do prepare the income statement and how we prepare the balance sheet is the two different things. You must, because in some kind of transaction we do perform in the balance sheet, some of them in the income statement. Here is very important things. The profit and loss account, which is income statement of retail business, will first calculate the gross profit, and then would be add the additional revenues and deduct the overhead for the period. The final figure derived is the net profit for the period. You know that you have seen the examples about the income statement, where we do calculation on the retail business. First it comes with the revenue minus cost of goods sold. And the gross profit represents the difference between the sales for the period and the cost of sales, right? This is for retail. What about the production company, where we can see the cost of goods sold, the transaction, right? But in the retail company, which is just buying and selling the products, which is already done, we won't use the cost of goods sold. We use here is the cost of sales, because we have some cost of sales when we purchase some raw materials, for example, some products to be sold after that, like transportation, like salary for staff, for cargo, and so on. So right now we are talking about the retail businesses, or we can call them as service companies. So the cost of sales may be identified by matching the cost of each sale to the particular sale, or by adjusting the goods purchased during the period to take account of opening and closing stocks. So in the when we do any kind of purchase, for example, when we talk about the a retail company. Most of companies firstly purchase some kind of products, like some goods, and then they sell it, right? And here we have some kind of definitions that we call it stocks or inventories, right? This is the goods itself that we are going to sell in the future. So opening, which means at the open the year, how much we have in inventories, we make a calculation how much we have in inventories in our stocks, right? At the closing stocks, this is the closing stocks, the number of inventories, the number of amount of inventories at the end of the year. So, and when we prepare the income statement, always we use a different kind of method how to make a calculation based on the stock costing. We call it stock costing methods. About this topic, we are going to start at the next class. So, and after that, I will show you a few kinds of methods how we can calculate the stocks or inventories, we call it. So here is as well when we prepare any kind of income statement or profit and loss statement, we must consider about the accounting conventions and the principles. You remember at the first classes we have studied about the accounting principles, which is the 8 main principles we have in accounting. The rules that we should use when we do preparation of any kind of financial statement. And we always must remember what they are talking about and how we should interpret them. For example, here it says that the realization convention states that the revenue is recognized when it has been realized. This is as well, we call it the principle of income recognition. You remember? I have just opened you the old topic about the accounting concept and convention. Will show you that one, principle one, which is very important. Just a moment. The principle of income recognition. So we recognize the income, the first one, when the seller, or we call it the company, for example, had performed the necessary action to obtain the income, which means this already made some sales, right? Just find the customers and put the goods on, drive the goods to the shops or some kind of retail companies and try to sell it. Or, for example, after that, maybe assign some contracts to sell the products. Then, when his income can be measured objectively, that means when the income is measured in the monetary units, that in the money, in the cash units, maybe. Or it's not won't be cash. It can be as well at the bank transaction. And as well, when the income can be collected, right? That means when it's not income is collectory, but can be collected in the future. That, for example, I'm a seller. I sold some products, for example, the goods one, and I fixed the price for the goods first day, of course, and then I issued the invoice to the customers when they have to pay, what kind of amount they must pay for the goods, right? And they can make a payment by the cash or non-cash method. This depends how you do, how you firstly manage it. So this is very important, the income recognition. And right now we are talking about under financial management. Here is when we talk about the realization convention. This is state that the revenue is recognized when it has been realized, right? What about the matching convention that state that the expense should be matched to the revenues that they help generate? And this is two main conventions that we use in the accounting when we do preparation of the income statement or the profit and loss statement. So, and very important things here is a particular expense report in the profit and loss account may not be the same as the cash paid. This is very important when we prepare the income statement. Very important things when you won't be confused when you do prepare the cash flow statement. And this we have some kind of transaction which is called accruals on prepared expenses. And right now I wanna show you first, just a moment. So the profit and loss account, profit and loss statement, this is income statement. This is another definition for the income statement. At different books you can find different, two kind of definitions. You won't be confused with the same things. What is accrual? So we have some expenses we do when we do run the business. And some expenses, for example, is incurred but not paid in the accounting year. For example, we are going to pay the salary for our staff, but we are going to pay for this year. But we have to pay, for example, but we haven't paid in the cash money. But we have to record in our income statement the expenses, like, for example, we do payment for the salaries or like another kind of expenses. This calls accruals. This is very important. The expense which is incurred that we already is made, like, but we haven't paid for those expenses in the cash means. The prepayment, we have as well the expense which calls prepayment. This is the expense that have not been incurred, but the amount have been paid in the accounting year. That, for example, we have made some advance, we paid some cash money. What we talk about, for example, about the salary, when we pay the advance for our staff before the ending of the month, which would be in December, for example, which means this kind of expense is not being incurred, but already paid. And this kind of prepayment expenses is treated as expenses in the profit and loss account. This is very important as well. We do consider about this expense when we prepare the cash flow statement. Okay, I have some kind of question. Let me see first. Okay, here is, let me explain you first about accruals. So accruals is expenses. We use the word accruals for the expense which is incurred, which is like being made, but not paid in the accounting year, not paid at the moment, at this year, for example. When we do prepare the income statement, we always prepare at the end of the year, for example, in December, right? And sometimes we pay, as you have given me example, like a rental. For example, we pay the rental. we have to pay for the rental of the December month. So that means the expense is already incurred, but we haven't paid as for our owners, which is owner of the building could be, or the offices. We are going to pay in the next year, for example, starting from the January. So that means that the expenses which you must pay, but you haven't paid in this year. So you are going to pay in the next year. And where is the action being made by the expense is already made. Like you have been used like offices or some buildings by the rentals. You're already using that one. Or about the salary as well. When, for example, you're working based on the fixed salary, which is you should, for example, when the accountant prepare the income statement at the end of the December, but the accountant haven't paid the salary to the staff for the December month. But the expense already incurred. It must be paid. But if, for example, in some kind of situation that have no cash money or something else, they were going to pay in the January for the salary of December. This is a simple thing that happens in the companies every time and every year. What about the prepaid one, prepayments? That we do prepayment, which is we do advance. Well, we are making the payment by the cash or bank transactions, but we haven't used, for example, the rental pay. We haven't used the such of services that we are going to use in the future. For example, as well about the rental of the offices. You do payment for the advance for the 2 or 3 months. As you told, here is given to me some examples, same things. So you already paid an advance, but actually you haven't used it yet because you are going to use in the future, right? After a few months only. This is the prepayment. So it's very important when I give you any kind of practical exercises based on income statement, you have to recognize, interpret transactions in a correct way. For example, if it would be considered about the expenses, to define what kind of expenses is accruals or prepayment. It has been made or going to be made in the future. It's very important. Any kind of question about the accruals and prepayment expenses? I hope that should be clear. Good. So next one, next part of this topic is about the depreciation. But before starting the depreciation topic, we are going to first look at our homework assignment. So here is practical exercise. We have based on the preparation of balance sheet income statement. Is based on the homework assignment number 5, right? I have received your homework assignments based on the in my email, but of course I haven't reviewed it because some of you still sending me. So now I'm going to show you the right solution. After that, I won't allow to receive any kind of homework assignments, your papers, because I'm already going to show you the right solutions, right? This is like logically. So first exercise was based on the balance sheet and the matching exercise, which calls. So you have to match the items on the right within the left side, right? So here is given to you already the right solution. This is most of you have done correctly. I hope so, because we have studied the previous topics. What is a fixed asset? Is items of the monetary value which have a long-term factor and can be used repeatedly, right? About the current asset, anything owned by the organization which is likely to be turned into cash before the next balance sheet due, usually within 1 year. Current liability, anything owed by the organization which is likely to be paid in the cash before the next balance sheet date, usually within the 1 year, right? The short-term liabilities. Next one is the long-term liabilities, which is we're using should be paid within the more than 1 year, and the capital is the shareholders' equity, right? The investment money that shareholders contribute to the company. So I think this is all is clear and you have done correctly. So we can move for the next one. So next exercise number 2 is based on the balance sheet. So here is given to you the list of accounts in the alphabetical order. So you have to prepare the balance sheet. And I was giving you as well the table of the balance sheet, which will help you to prepare the right balance sheet. So here we have some accounts payable, accounts receivable, cash on hand, common stock, depreciation, garage and equipment, inventory, land owned, the long-term loans, other and retained earnings, as well as taxes payable. Any kind of transaction is not clear for you, just let me know. We'll explain you. I think all is already familiar, right? We have done previous assignments based on the balance sheet. So here is the solution for the exercise number 2. So we have been put it in the correct side, the current assets. On the current assets, we have a cash on hand, 14,000 accounts receivable, 25,000, and the inventory, 15,000. This is all is the total current assets. Next one, we do recognize the fixed assets. From the transaction, we have a fixed assets as a garage and equipment. Then we have to deduct the depreciation. Here is very important, less depreciation, land owned, and other kind of tangible and intangible assets. So, and the total assets we have got around like 88,000, right? And next one, what about the liabilities and equities? Here is we have a liability. The accounts payables, taxes payables, and long-term loans is all about, we are talking about the long-term liabilities, which is equal to 42,500. And we have a shareholders' equity, like a common stock, and that's all. The retained earnings is just a 0 one. We have no retained earnings in our list, right? And here is total liabilities and shareholders' equity equal to 88,000. So right now we have a balance in our balance sheet with the assets equal to 88,000, as well our liabilities and shareholders' equity equal to the same amount, right? So this is should be clear. Any kind of question about the balance sheet? So I tried to prepare you some simple balance sheet. You see, if you in the list you have a few little only transactions. So if not any question, we're going to move on the exercise number 3, which is I think the most difficult, and most of you have been confused with that one. So here is exercise number 3, based on the income statement. So we describe a limited number of transactions of a newly created consultancy company in the year 1. So you have the year assignment. You have to prepare the income statement for the year 1. So here is you are given some transactions, and based on this transaction, you have to be you should be interpret them accordingly when you do prepare for the income statement. according to transactions, right? So this is here is very interesting things happens. Let's see. So first one, here is the owner contributed the 5,000 euro brought in the case by issuing the 500 shares at the nominal value of a 10 euro each one. So that means the owner invested 5,000 euro in the company, right? So that means he assumes that for the each share it would be equal to 10 euros. So he was issuing around the 500 shares. This is just a knowledge for you. Next one. To start the operation, the company borrowed 5,000 euro at an annual interest rate of 5%. So the interest and repayment are due in the January of each year for the next 5 years, starting year 2. Here it says that the owner borrowed 5,000 euro, which is he must pay the interest rate by the 5%, right? And very important thing that the interest and the repayment, it should be done in the January each year by starting from the second year, right? But right now, our assignment says that we have to prepare the income statement for the first year only. So this transaction won't be contributed in our income statement because here is the interest and repayments would be done in the would be realized in the second year. Next one, the company provided 22,000 euro of consulting service to 8 kind of customers, and the work is totally performed and the invoice have been sent. So here is firstly, the company already made some actions to sell the products, right? To offer the services we call here is. So it means already realized some services, already issued the invoice and sent to the customers, right? And then corresponding the cash payments amount at 20,000 euro. So here it says the owner collected only 20,000 in the cash money, but it's very important. But he performed the services for the 22,000. That means we have to recognize 22,000 euro because this is the whole revenue from the consulting services which is made. So now we are going to move on the solution. So where is the revenue minus expense? Just remind you about the formula. Revenue minus expense, you show the net income, profit or loss. So when we do preparation of the income statement, first we have to recognize about the revenues. So we put the line about the sales, we call it revenues, like operating revenues given to you. Total revenues is under our transactions is 22,000, right? So some of you asked me why is it 22 or not 20, because we have collected in the cash 20,000 only. But the very important when we are trying to interpret quarterly transactions, we have to remember about them accounting concepts and principles, right? Whereas our income recognition principle says that the income revenue is recognized when it's realized already. That means when the action made, here it says is performed, right? That means the owner made actions to sell the products or services. Then it's already issued the invoices as well. That means his consulting service, the customer already have been used. So anyway, he would receive the payments for that, which is called the revenue. But at the moment, he receives only 20,000 of euro. By the income recognition principle, we must recognize and record the amount of 22,000, right? And here is I put the operating revenues is equal to 22,000. This is number 3 total revenue, number 3, which is means under number 3 transactions. So if it's clear, we can move for the next one. So number 4, a consultant is hired on a partial time basis, and he earned 16,000 euro salaries and social charges. The corresponding cash payments in year 1 were 10,000 euro only. So that means we hire some people, and we are going to make we should make the payment by the salary of 16,000, right? But at the moment we made the cash payments only for the 10,000 euro at the moment. But as we already made some consulting services, we hired the consultant, which he already made his job, right? Where we are going to already receive the revenue, we must pay him the 16,000. But sometimes we can't do it. Maybe we have no cash enough to pay him, and here is the situation that we paid only 10,000. And this is expenses. This expenses called accruals, right? You remember about the accruals definition, where the expenses is incurred already happened. That for example, like consultant, we hired him. He already made his job. He has made some consulting service to our customers, but we haven't paid full the amount of his salaries. We haven't paid the full expenses. And our income statement, we must, under operating expenses, we show that the salaries and social charges equal to 16,000, right? This is the under number 4 transactions. So, any questions so far about this? Is so why I told you that when we do expenses, we have to recognize them and interpret correctly in our financial statements. As here is the salaries of the consultants, seems as its accruals expenses. Oh, sorry. So one more explanation, because here is asking me. So here is we are a consulting company, right? We hired the consultant who made his already job, because we are preparing the income statement by the end of the year, right? He already made his job during the year. He made the consulting services to our customers, and we have to pay him 16,000, which is the salaries, for example. And here we say that we paid by the cash his salary by only for 10,000 only. That means the 6,000 we are going to pay in the next year. But that as well as it's been seems like this is accrual expense, which is the consultant made his job, everything, but we must pay the full amount. We must recognize this amount in our income statement as in the full amount, which is given at the 16,000. No matter how much we paid in the cash him or advance from the salary. Anyway, we have to pay 16,000 because his job already realized, right? His job already incurred, that he has done his works in the company. And we must record these transactions by taking the full amount of the salary expenses, which is the 16,000 of euro. I think this should be clear. And here is on this operating expenses, we show that the salaries is around 16,000. Next one. Next, number 5 transactions. Here is the company says they paid 2,000 euro of advertising cost. This is simple, right? So that means the company used advertising services and already made the payment by the 2000. It's no matter is by the cash or bank transfer already made. So this is expenses incurred, that means which already realized and being paid already. So we show it here is under operating expenses like advertising equal to 2000, right? Next one, number 6, additional this miscellaneous operating expense, which is say the small expenses were incurred for 2000 euro. Whereas 1,500 are payable at the end of the year 1. So here is, seems that this is the same as the accrual expenses because the expense already incurred, right? Because we have made already expense, but we haven't paid them yet for the full amount. We are going to pay at the end of the year only 1,500. It doesn't matter how much we are going to pay at the end of year. The most important thing that this expense already incurred, that we already use something like transportation, for example, maybe, or some cargo things. We already made some actions where the expenses were made, but we haven't paid it yet. So this is seems as well. This is accrual expenses, and we have to show in our income statement and record them as well. Like we call it as expenses, which is equal to 2000, right? So by these expenses already, the operating expenses we have been done, and total operating expenses shows that we have 20,000 negative. So to calculate our interest and taxes, the income before the interest and taxes, we have to take our revenue, deduct the expenses, and we get them. Income before the interest and tax, which is equal to 2000, right? Here is formula, so we are going to move by this formula, based on this formula. So 22,000 minus the 20,000, which is operating expense, gives us 2,000 of the income before the interest and taxes, right? So next one. Next one, transaction is number 7. So new contracts with the value of 42,000 euro were signed in the year 1 and will be performed in the year 2, in the second year. All the cash payments will take place in the year 2. What this transaction says? That means we find our customer, or we find some partners, and we agreed for some kind of conditions and terms and signed the contract, which is contract is signed comes with the value of 42,000. For example, as we are here, it says that we are consulting company, and our customers going to get the consulting services, which is equal for 42,000 euro, right? And very important things that we have signed contract only, but the cash payments will be taken in the second year, in the year 2. This transaction won't be recorded in the income statement. So we won't put this transaction in our income statement because first, we just signed the contract only for 42,000. We haven't made the services, the consulting services, right? Our main operation business, what we do actually, we haven't made it. But here it says that we are going to receive the cash payments in the next year. That means at the next year, we do our consulting services, and that year we are going to receive the payments for these services, which will be recognized as a revenue, right? And this is as well to for you to interpret correctly this statement. You have to remember about the principle of income recognition. You remember three things there is very important. I want to show you. Here is that when we recognize our revenue, our income, the first, when the seller had performed the necessary action to obtain income, which means when he already provided consulting services, but in our assignment, we haven't provided the consulting services, we just signed the contract only, right? Next one, income can be measured objectively. It's okay, it's measured for 42,000 euro. And the income can be collected. It hasn't been collected because the first things, most important, that our company, consulting company, haven't made the actions which is under consulting services. So if the first one, you haven't obtained the first point of this principle, that means you cannot recognize this income in this year, in the first year, right? That means this transaction won't be considered in this income statement of the year one. So this is very important. And next one, number 8, the results are positive, which means the company, the owner have got the profit, right? And the owner decides to pay a dividend of 800 euro out of the first year earnings, and the cash payment is made in the second year. So this is very important. So we have our profit, which is a positive, right? Let me show you the next slide. Here is, we have a positive amount, which is the profit we recognize as a profit for 2,000, right? And here we say that the owner decided to pay the dividends from the first year of the income, from the first year of the revenue, right? But the payment itself, the cash payment itself for the shareholders would be done in the next year. So this means it seems it's the same as the accrual expenses that we are going to pay in this year, but the action will be made in the next year. So we must consider this transaction and record in our income statement. Here is, we call it interest revenues for 800, or the shareholders dividends I just showed you is under number 8 transaction. And here is, we have been recorded our dividends by 800 euro. Doesn't matter that we haven't paid the cash because we are going to pay the next year, but this is revenue belongs to this year for the first year, right? Because it's being recognized from the revenue which we have done already in this year. So, and we have to put this as accrual expenses under interest revenues in the income statement. Now we are going to make a calculation and see how many the earnings before tax we have. Here is 2,000, which is the income before interest and taxes, minus the dividends, 800. We have got the 1,200, which is the earnings before taxes. Then we have to deduct our taxes, right, based on the income statement. But here is in the assignment, here is no any mention about the taxes, how much we should pay or should we pay. So if we have no any kind of transaction about which taxes, we just put 0. And after that, the net income is which is equal to 1,200. So right now we can recognize that the company have got the income which is equal to 1,200. So this is here is income statement have been prepared, and I would like to explain you some things because you have been I think you have been confused with some transactions. The first one, the owner contributed the 5,000. This statement just says you that the owner invests to the company 5,000. So you won't record this amount to your income statement. Next one, the owner takes borrowed the money, 5,000 euro, and by the interest of rate 5%, right? And he must pay the interest and repayments starting from the second year. So in the first year, we are not going to pay our dividends and interest and repayments, because we have just borrowed the money, and we are going to start to pay in the January of the second year. So as well, it won't be recognized in our income statement. Next one is the all accrual expenses. For example, as here is the salaries, and what else we have? Small expenses for 2000. Advertising is already clear that we have paid already, is incurred expenses. The revenue, which is we have been already realized the consulting services, and we are going to get the 22,000. We have to record this amount by the full amount. What else? About the contract, which is we are going to receive payments in the next year. As well, it will be realized in the next year. So we are not going to record this amount in our income statement. And as well, about our dividends, that we are going to pay 800 dividends from the first year of earnings. So this is like accrual expenses that which is already incurred in this year, but we are going to pay by the cash for the next year. But as it accrues, we have to show it in our income statement, which means we have to record it. So just a moment, I have some questions. Let me see what kind of question you have. So here is the most important thing, that we are preparing the income statement. It's not the balance sheet. So the balance sheet, when we prepare the balance sheet, we are concerned about other things. For example, here is in the balance sheet we show our liabilities, that we borrowed the money, 5,000, and so on. So you won't be confused, because the income statement would be differ from the balance sheet, which I mean would be recorded differently from the balance sheet or the cash flow statement. So the total expense you have done correctly, I think so. Here is what is just moment. Which is we have a salary 16,000, right? Advertising for 2,000, and other expense for 2,000, and total is 20,000. So this should be clear, right? Because I have some question about this, so I'm just confirming that this is a clear one. Next one. Next one, some of you have forgot to record the dividends, which is here is. You see, our owner is decided to pay the dividends of 800 of the year from the year one, which is the 800 dividends, which is generated from the first year of revenue. That means this expense belongs to the first year. Is accruals, which is the expense incurred but not paid yet, and he is going to pay in the next year. As its accruals is incurred already, that he decided already to pay, we have to show it in our income statement. Because the first main point, that the 800 euro is the dividends which is generated from the revenue of the first year, right? From the 22,000 of the consulting services. This is why we put the 800 in our income statement, we record it. Some of you are asking me why we haven't recorded the 10,000, which is the 10,000. Or, okay, about the salary that the corresponding, the cash payments of the, in year one were 10,000. This means about the under salary transactions. You see here is says that a consultant is hired on a partial time basis. He earns 16,000, and the corresponding cash payments in year were 10,000. That means this sentence belongs to the salary. That means we paid only 10,000 of his whole salary, not the 16 one, by the cash one. But as this expense is already incurred, that he already have done his job, we must pay 16,000, and we have to record the whole amount of the 16,000. So, and next one, what kind of question I have? Okay, you have already explained that things. Let me see another things what you are. So you have to remember the profit and loss statement. This is same as the income statement. We show all our expenses that been incurred, and as well like dividends, interest expenses, and the taxes payable. We have to show in our income statement to get the net income, to get the profit of the company. That how much actually profit we earn in the in this year, in the first year. So, and very important when you have to be, you have take attention what the assignment says itself. But here it says for you that the clear is you have to prepare the income statement for the year one only. So you are not thinking concerning about the second year. Only you are preparing the statement for the year one. So why I'm talking about right now this? Because if you have further kind of assignments or in the exam, you must be considered for which year you are preparing the income statement, and what kind of you have expenses, which is prepared expenses, which is accrual expenses. As well, you will have some kind of this sentence, like a new contract is assigned, like this one. Just this is for you that you have to be interpret. You have to try to interpret this transaction correctly. It might be confuse you, but it will help you in the future. That if you have the same, you will face same problems, same situation, or same kind of assignment, you'll be know that should you recognize it or not. Should you record this kind of transaction in your income statement or not? So one more thing I would like to explain. Most of you are asking about accruals, and most of you are asking why we are, for example, about the salary, when we say that we paid only 10,000, but we have to pay 16,000. Why we record the whole amount? Because this is all about the accrual expenses, which is the definition of accrual, which is the expenses incurred, which is realized, which is made already, but the payment itself haven't made, maybe in the full amount, maybe in the sum of part amount. This is very important. So, and doesn't matter is how the cash payments made by this expression, by the full amount or by the part of amount. The most important, what the whole amount of these expenses. Here is that by the salary expense is 16,000, and as our consultant have been worked during the year, he already made his job. Like we already gained some revenue, like 22,000. That means he has done his job, that these expenses by the salaries is already incurred. We must pay him. But we have a different kind of situation that we won't pay because we have no cash enough money or something else. And we are like paying partly, or we are trying to pay or extend it for the next months or the years. So any kind of expenses which is already incurred, which means you already use someone's services, or you already use some kind of assets, but you haven't been paid for them, you have to record in your income statement. Because this kind of expenses, which is actions made by the consultant, where he made the consulting services, he already he helped us to get a revenue by the 22,000 euro, right? You remember when we talk about what is the actually revenue and what is the assets, which is assets generates the revenues, right? The assets helps to get the revenues, to obtain the revenues into the company. Like here is assets is expenses, right? You remember? And the assets we put the expenses. As well, this is accrual expenses as the consultant salaries, which is 16,000. So this moment I have some kind of question. Let me see first. Because yeah, here is Mr. Sheikhullah Sahibzada says the same things that I'm explaining you. Just he is chatting. You can see that why we are recording 16,000 of salary. About some of you asking about the dividends. The first, when we do the here we say that the owner decides to pay the dividends. That when we pay the dividends to our shareholders, in our accounting, it seems that the money goes out from the company, right? That means we can assume that this is as well, this is like company's expenses. It's not expenses itself, because this is just, this call is the interest revenues or dividends. But as we have here is, we are going to pay in the next year, but this is the dividends is being incurred from the year one. That means these dividends have been generated from the sales which have been done in this year, in the first year, like from the 22,000 of euro, right? Which means that dividends of 800 euro belongs to the 22,000 of revenue or the consulting services, right? We have been generated this kind of 800 from the 22,000 of the revenues. And the owner, he already decided in this year, the first year, that he's going to pay these dividends, which is generated from the first year of revenue. But he haven't made the cash payment yet, but going to pay in the next year. But this doesn't matter. The first thing is important, that this revenue have been taken, these dividends have been taken from the revenue of the first year, and we have to record it in our income statement, that interest revenue would pay by the 800 to the shareholders as a dividends, right? Because this revenue have been generated from this amount, from the total revenue. So this is all about the dividends. Okay, another kind of questions. So I have the question which is logically would be let's say having realized, like some of you asking, if we are going here, if we are recognizing that dividends here is recording it, why we are not recording the interest rates, right? Here is interest rates, here where is okay, we borrowed the 5,000 euros from the bank and we must pay the interest rates. But in this sentence, the very important thing is that the interest and repayments must be paid in the January month, each January month of each year, but starting from the second year, right? So, and here is just a moment. Let me think first. This seems as is okay. That we are going to pay from. We are going to pay in the second year, in the January, which is interest would be belongs for the first year, right? So logically, that's true that we have to put this interest in our interest expenses, which is would be around 250, right? Which is the 5% from 5,000. So let me put it. So okay, this has been mistaken. Actually, this exercise has been taken from the books, but sometimes they can do some kind of mistakes. No one's checked them. So here we are putting the 250, right? Which is the rate expenses or interest expenses. And then our the net income would be changed, would be like around 950 of net income only, right? So it just would be change that amount. You don't have that slide, sorry. So I would change this amount will send you with the correct ones. So here is 950. Yes, right? Yeah, this is that you are right. So who here is Mr. Let me see. The Mr. Samir Jam. So thank you very much for your attention of these points. That's true. So that as we are paying in the second year, but we have already taken the money, we already the birth money. That means this is expenses incurred, right? And the interest expense must be recorded in the income statement of the first year. So we put the 250 here is. And when we deduct it from our earnings before taxes, we will get the net income equal to 950 only. So the amount will be lesser than we had before that. So this is all about the income statement. So we have done all transactions. Any questions so far? Some of you are asking me why we shouldn't record the dividends in the income statement or the profits and loss statement. the income statement, we always, to get our net income, which is the profit, which is the profit after all deduction we have made, after all expenses, the operating we have made, like operating expenses or cost of sales, like, or that we have paid some interest rates for the borrowed money, or we have paid the taxes, as well the dividends also, because you remember we have a different kind of dividends. Some dividends with the fixed rate, we must pay those dividends to the shareholders, no matter did we have any kind of revenues or not. And here we said that the owner decided to pay those dividends, and we have to show these dividends as the company's all deductions in the income statement to get the clear profit, which is would be the net profit. We say that. So this practical exercise, I will send you after the class. We'll email you after the class as well the new topic on the finance, which is. So no, okay. I hope no questions. If you have so far, just let me know, please. So this is, I was giving you this kind of exercise, right? The assignment one. But you don't worry, you won't have this kind of assignment in your exams. Because during the classes, I'm trying to give you some most of difficult exercises. But on the exam, there will be more simply, because I'm trying to like prepare you for the difficult ones. But after that, you'll be able to solve any kind of simple practical exercises, just like that. If you will get the transactions, if you will get the income statement exercise, it can be based just in the list of transactions, whereas would be given to you all the transactions just given in alphabetical order, already with the amounts. You just should put it on the correct size of the income statement. But if I would give you some kind of this transaction where you have to think and interpret the transaction itself, it won't be so confused and would be given you with more simple assignments like I was giving you before once. The balance sheet you already know. I think the balance sheet, you have no problems with the balance sheet that you can prepare. And in the future, we are going to study about the cash statement flow. And in the cash statement flow, the situation would be interpreted differently from the income statement. Because in the cash statement flow, we do calculation for the amount which is already made by the cash money from the company. So that ones would be explained you in the next classes. So I think we can finish the class for today, because most of you have been already come from the vacation, and we have done practical exercise. So the chapter 3 we are going to finish and complete on the next classes about the depreciation, because here is we have to start a lot of depreciation. What is depreciation? We have some practical exercise which will be also based on the calculation. So I want you confused with the income statement that we have done. So for today, that's enough by the income statement exercise, I think so. So thank you very much, and I hope you joined the class. Any questions, just email me. I know that I'm not able to review your assignments and give you feedbacks. So as I hope to be in faster, quickly to reply you, because of I have got around 60 assignments, 60 items of assignments, which is must be reviewed, which is must be quickly assessed and evaluated. So you, and I just wanna to tell you that if you have some questions which is regarding the assignment itself, you have to put that question like in your when you email me in your like in your content. Okay, that will be in your topic content. Okay, I have another kind of question. Let me see first about the time changes. Some of you asking me to change the class time from the 6:30 to 7 p.m. So for me, it doesn't matter. I can start at 6:30 or at 7. It's most important. Is it comfortable for the rest of students? If you are agree, we can change our class time and ask the administration to be changed. If you are all are agree to change the class time by the 7 evening time, by the Kabul time for the 7 o'clock, that would be great one for me too. So it depends. You see, I have some kind of message that some of you say that it's no problem. Some of you say that it's not okay. That some of you are not agree. If you are most of you agree, so we can change it. I think so. The administration shouldn't be should allow us. Because for me, I have a difference by the 3 hours with the Kabul. So by the 3, which is in my country is earlier by the 3 hours than in Kabul. So it doesn't matter for me. It should be half hour later or by the 6:30. So it's okay. We can manage it if most of you would be agree with the time changes. So okay, that's all for today. We have completed our homework assignment as all the part of the financial management topics, which is under finance. And after class, we're going to send you all the presentations. Or after class, I hope so, or tomorrow, because I want to do some changes as well, that you won't be confused. If no any question, we can finish the class. So thank you for your attention. Thank you for your questions. Thank you for your interest in financial management. I hope most of you are clear with the assignment. So goodbye. Have a good time. Have a good weekend.